Check out this trade I just closed with a massive 340% gain in under 48 hours. How did I know this chart was about to explode? Because of one specific candlestick pattern that most retail traders completely misunderstand. Today, I'll be revealing the 5 foundation candlestick patterns I use every single day to read charts and spot opportunities with 95% accuracy. These are the money makers, the ones that show up most frequently and have the highest win rates when you trade them correctly. Stick around until the end because I'll share a simple method that makes spotting these patterns effortless, even if you can't memorize them all. Alright, let's get into it. First, we need to understand candlesticks in depth. Every single candlestick tells a story about the battle between buyers and sellers. A green candle appears when the price closes higher than where it opened. This shows buyers were stronger during that time period. Red candles show the opposite scenario. Sellers took control and pushed the closing price below the opening price. Now here's what most traders miss. It's not just the color that matters. The size and shape of each candle reveals how intense the buying or selling pressure actually was. Think of large candle bodies as a sign of market verdict. A massive green body means buyers didn't just win, they dominated the entire session with barely any pushback from sellers. See these lines? This is where market psychology becomes crystal clear. A long wick extending downward shows sellers managed to push price way down temporarily, but then buyers came in aggressively and reversed all that movement before the session ended. That's a clear signal of strong demand at that price level. Conversely, a long wick extending upward reveals the reverse. Buyers attempted to drive prices higher, but sellers stepped in forcefully and rejected those higher prices, pushing everything back down. This demonstrates significant supply at that level. When you spot a candle with a tiny body and equal-length wicks on both ends, you're looking at pure indecision. Neither side could gain the upper hand. It's essentially a standoff between bulls and bears. With these candlestick fundamentals clear, let's jump into 5 high-probability candlestick patterns. The first one is breakout candles. This pattern is characterized by 3 or more small-bodied candles moving sideways in a tight range. Then suddenly, a huge candle explodes out of that range. This setup reveals that the market was trapped in uncertainty, with no decisive movement, until either buyers or sellers gathered sufficient momentum to force price powerfully in one direction. Those small candles show consolidation. That large candle, that's your breakout confirmation. For a legitimate setup, you must see a minimum of 3 consolidating candles and 1 large breakout candle measuring 2 to 3 times larger than the consolidation candles. The consolidation candle colors are irrelevant. Focus on their small body size. A bullish setup features a massive green candle bursting upward, while a bearish setup displays a massive red candle plunging downward. When this formation appears, enter a position matching the breakout candle's direction when it closes. Set your stop loss at the breakout candle's opening level, and take profit target should be twice the distance of your stop loss. The second one is my absolute favorite, the engulfing candlestick pattern. This pattern consists of 2 candles, a smaller first candle, then a massive candle of the opposite color. For this pattern to occur, the second candle's body must be longer than the first candle's body. There are 2 types of engulfing. In bullish engulfing, a small red candle is followed by a larger green candle that completely engulfs the body of the small candle, while bearish engulfing is the complete opposite, where a green candle is followed by a larger red candle that is larger than the body of the previous green candle. Let me show you a perfect example of how powerful this pattern can be. Notice how price approaches the strong support level where it had bounced multiple times before. We can expect another bounce, but we need confirmation before entering. That's exactly when this incredible bullish engulfing candle forms right at the support level, completely consuming the previous red candle. This demonstrates incredibly strong buying momentum. We can be highly confident that price will continue moving upward from this level. To trade it, take a long position at the closing price of the large green candle. Position your stop loss at the bottom wick of that engulfing candle and aim for 2 times your stop loss distance. In case of bearish engulfing, take short position at the close of large red candle. Remember, the bigger the engulfing candle, the higher the probability of a successful reversal. The third pattern is pin bar. It allows incredibly accurate entry signals. A pin bar displays 2 key characteristics, a tiny candle body and 1 very long wick pointing out in one direction. Bullish pin bar features a compact body with a long lower wick. What's happening? Sellers managed to drive prices downward temporarily, but then buyers aggressively reversed that decline and recovered most of the losses by closing time. This reveals accumulating buying pressure at that price zone. On the other hand, a bearish pin bar shows a compact body with a long upper wick. Here, buyers attempted to push prices upward, but sellers responded with overwhelming force, erasing those gains and driving prices back down substantially by the close. Never enter immediately after a pin bar. Instead, wait for a confirmation. In case of a bullish pin bar, observe the next candle. It must close green, validating upward pressure. Then enter your long position at the close of the green candle. Position your stop loss below the pin bar's extended lower wick. For bearish pin bars, Watch for the following candle to close red, confirming selling pressure. Then execute your short position at the close of the red candle. Set your stop loss above the pin bar's extended upper wick. Before we move to pattern number 4, let me quickly mention something crucial. Even the best candlestick pattern won't help if you're trading with the wrong broker. Spreads, execution speed, and reliability can make or break your trades. Our team at BrokerCheck spent months reviewing the top brokers in the market. You can find detailed reviews and our comparison tool at the link below. Check out the features, fees, and regulations side by side to choose what fits your trading style best. All right, now let's jump into pattern number 4. The Marubozu candle. It's a powerful trend continuation signal. This formation is characterized by a large candle body with absolutely no wicks whatsoever. Essentially, just a solid rectangular block. A bullish Marubozu is a massive green candle with 0 wicks. This reveals that the opening price matched the exact lowest point of the period, while the closing price aligned perfectly with the highest point. Buyers maintained complete control from start to finish, while bearish Marubozu is a large red candle without any wicks. It shows sellers dominated every moment of the trading period. This pattern typically appears during the middle phase of strong trending markets, confirming that the existing momentum will persist with even greater force. When a Marubozu forms within an established trend, enter in the direction matching the trend when the Marubozu closes. Set your stop loss beyond the Marubozu candle's extreme low in case of bullish, or extreme high in case of bearish, and target the next significant support or resistance zone. Marubozu candles signal powerful continuation moves, so ensure you've identified a clear existing trend before trading this pattern. Don't trade Marubozu patterns in sideways, choppy markets. The last pattern is a 3-bar continuation pattern. This pattern is great for riding trends that most traders miss. You need 3 candles in a row in this specific order. First candle is a large candle, clearly bigger than the candles around it. Second candle is a smaller candle in the opposite color that's less than half the size of the first candle. And a third large candle that closes above the second candle. Bullish setup shows a large green candle, a smaller red candle, and another large green candle, while bearish setup shows a large red candle, a smaller green candle, and another large red candle. Here's what's happening. The first large candle shows strong momentum in one direction. The middle smaller candle is just traders taking profits. It's not a reversal. The third large candle confirms the trend is still going strong. Think of it like a runner taking a quick breath before the final sprint to the finish. For bullish setups, enter a long trade when the third candle closes, put your stop loss below the second candle's lowest point, and target 2 to 3 times your stop loss distance or the next major resistance level. For bearish setups, enter a short trade when the third candle closes, put your stop loss above the second candle's highest point, target 2 to 3 times your risk or the next major support level. This pattern works best when a clear trend is already happening and it shows up after a small pause or pullback. Now you know all 5 patterns. But here's the most important part. What time frame should you use to spot these patterns most accurately? The answer is simple. Stick to 1-hour charts or higher. These patterns work best on higher time frames because they filter out market noise and give you cleaner, more reliable signals. Now, here's that bonus tip I promised for everyone who made it to the end. Even though I recommend trying to memorize these patterns so you can spot them instantly, I completely understand that it can be challenging, especially when you're starting out. Well, here's something that will make your life so much easier. There's actually a way to have your chart tell you exactly where these candlestick patterns occur. Here's how you do it. Go to TradingView, click on the Indicators tab at the top. Type in whatever candlestick pattern you're looking for. For this example, let's search for bullish engulfing. Simply click on it, and TradingView will automatically mark every single spot on your chart where a bullish engulfing candle appears. This makes it extremely easy to identify these patterns without having to strain your eyes looking for them. And there you have it. The 5 foundational candlestick patterns that can transform your trading. But we're not done yet. There are 8 more powerful patterns that are just as important as these 5, and we'll make a video on them only if this one reaches 200 likes. Creating videos like this takes a lot of time, effort, and research, and your likes are our biggest motivation. If this video helped you, please like the video, subscribe to the channel, and press the bell icon to stay updated.